Hey there. So if you miss what I'm about to show you in this video, you'll be kicking yourself in 5 years' time. Because right now, across Australia, there are five suburbs, five specific postcodes where billions of dollars in rail infrastructure are about to change everything. Property values, rental demand, commute times, lifestyle appeal, and investors who get in before the trains start running, they're the ones who will pocket the premium. Stick around because by the end of this video, you'll know exactly where those five suburbs are, why they're about to explode, and what you need to do right now to position yourself ahead of the crowd. So let's go. All right, so welcome back to the channel. If you're new here, I'm Aaron, and we help everyday Australians build wealth through smart property investments. Now, here's something you need to understand about infrastructure. When a major rail project gets announced, property prices don't just jump overnight. No, the market moves in waves. So what's wave one? It's the speculators. They rush in the moment the government announces a project. Prices tick up a bit, but it's mostly noise. Wave two, that's construction. The noise, the dusts, the road closures, most people avoid these areas. And that's usually when the smart money moves in because they know what's coming next, which is wave three. That's when the trains start running. Suddenly, that's used to be 40 minutes slog to the CBD is now 15 minutes door to door. Renters flood in, buyers scramble, and prices, they soar. Let's look at the data. When Sydney's Metro Northwest opened in 2019, houses within 400 meters of a station sold for 60.6% more than comparable houses just 2 to 3 kilometers away. Units, they soared 24.4%. So here's the kicker. Those premiums were locked in during construction. The people who bought when everyone else was complaining about the noise, they're the ones who's laughing now. Castle Hill saw 72% price growth over 10 years. Its neighbor, Vulcan Hills, without a metro station, only 49%. Crow's Nest, 79% growth. Camera, right next door, without direct metro transport, 62%. The pattern is crystal clear. Rail infrastructure doesn't just improve transport, it reshapes entire property markets. And right now, across 3 states, Victoria, New South Wales, and Queensland, there are 5 suburbs sitting right in the path of Australia's biggest rail investment of the next decade. I'm going to walk you through each one, where they are, what's being built, what the median prices are right now, and why you need to have them on your radar before everyone else catches on. Here's the thing I need you to remember. The window to buy at today's prices is narrow. Once these projects hit completion, the market recalibrates. The premium prices get priced in, and you'll be competing with cash-up buyers who've done their homework. So let's make sure you're one of them. Suburb number 1, Sunshine West in Victoria. Now, if you've been sleeping on Melbourne's West, it's time to wake up because Sunshine West is about to become one of the most strategically important transport hubs in the entire country. And here's why. The Victorian and federal governments have committed $7 billion, yes, billion with a B, to build the Melbourne Airport rail link. The centerpiece, the Sunshine Super Hub. This isn't just a train station upgrade. This is a total transformation. Sunshine is getting extra platforms, a dedicated traffic upgrades, bridge improvements, and signaling systems that will make it the connection points for regional rail services heading to Melbourne Airport. Think about that for a second. If you're heading from Geelong, Bendigo, or Ballarat, you won't have to go all the way into Southern Cross and then backtrack to Tullamarine. You'll switch at Sunshine and head straight to the airport. And if you're coming from Melbourne's southeast via the new metro tunnel, you'll have a direct run through to the airport as well. Sunshine becomes the spoke in the wheel, the nucleus, as one would say, the place where everything connects. And Sunshine West sits right on the doorstep. So right now, the median price in Sunshine West is around $700,000. That's accessible. That's affordable for a suburb that's just 13 kilometers from the Melbourne CBD. Compare that to Yarraville or Footscray, where you're paying well over $1 million. and the value proposition becomes obvious. But here's what most people miss. Sunshine West isn't just getting better trains, it's getting gentrification. The area has historically been industrial, factories, warehouse, working class routes. But as Melbourne's inner west gets more expensive, young professionals and families are pushing further out. And Sunshine West, with its proximity to the city, its big blocks, its character homes, and now its world-class transport links is becoming the next Footscray. Developers know it, councils know it, and the investors who are paying attention, they know it too. The Sunshine Super Hub is expected to be operational by 2030. That's 5 years away, and construction is already ramping up. So if you're looking for a suburb you can still get in under $1 million, where rental yields are solid, where capital growth is being engineered by infrastructure spend, Sunshine West has to be on your shortlist. But don't just take my word for it. Do your own research, walk the streets, talk to local agents, see what's actually happening on the ground. Because by the time the trains are running and the headlines are screaming about Sunshine's transformation, the opportunity will already be gone. All right, number 2, Westmead, New South Wales. Now, Westmead isn't exactly a secret. It's already known as one of the biggest health and education precincts in the entire Southern Hemisphere. You've got Westmead Hospital, the Children's Hospital, multiple research institutes, campuses for the University of Sydney and Western Sydney University. Thousands of doctors, nurses, researchers, students, and support staff work and study here every single day. But here's what's about to change the game. The Sydney Metro West. This is a 24-kilometre underground metro line connecting Westmead all the way through to Hunter Street in the Sydney CBD. Fully automated, driverless trains running every 4 minutes during peak hour. And Westmead is getting its own dedicated metro station. Think about the implications. Right now, if you're commuting from Westmead to the city, you're looking at around 40 to 50 minutes on a good day. With Metro West, that drops to under 25 minutes. Direct, no changes, no delays. For the 10,000 plus workers in the precinct, that's a game changer. For renters and buyers looking for lifestyle and connectivity, Westmead suddenly becomes one of the most compelling suburbs in all of Western Sydney. Now let's talk about the numbers. The current median house price in Westmead sits around the $1.5 million. Units around the 550,000 mark. Yes, houses are expensive, but think about what you are getting. You are getting 26 kilometers from the CBD. You've got a metro station opening in 2032. You're surrounded by hospitals, universities, schools, and research facilities that employ thousands of highly skilled professionals. And here's the kicker. Westmead's rental vacancy rate is just 1.3%. That's incredibly tight. Tenants are fighting for properties, and that means consistent rental income and upward pressure on rents. If you're an investor targeting the professional rental market, doctors, nurses, academics, and postgrad students, Westmead is a no-brainer. The units especially offer solid entry points. 550,000 gets you into a market with institutional employment, infrastructure investment, and long-term demand that isn't going anywhere. And don't forget, Westmead is also on the Parramatta Light Rail, which opened in late 2024. So if you've got light rail connecting you to Parramatta CBD, and you've got Metro West connecting you directly to Sydney CBD, that's dual connectivity. That's redundancy. That's the kind of infrastructure stack that creates sustained property value over decades, not just years. So Metro West is scheduled to open in 2032. That gives you 7 years to position yourself, build equity, and ride the wave as the market recalibrates around this massive infrastructure upgrade. Westmead isn't just speculation, it's strategy. All right, number 3, Five Dock in New South Wales. Now, this one's fascinating because Five Dock is already a highly desirable inner west suburb. Great schools, vibrant restaurant scene, community feel, it's close to the city. But here's what it's never had, heavy rail until now. Sydney Metro West, again, is delivering Five Dock its very, very first metro station, and that changes everything. Five Dock sits just 10 kilometers from Sydney CBD. It's surrounded by established suburbs like Drummoyne, Haberfield, and Concord. Traditionally, people living here have relied on buses to get into the city, buses that get stuck in traffic, buses that are unreliable during peak hour. But with Metro West, Five Dock gets a direct, fast underground connection to the CBD. No traffic, no delays, just 15 to 20 minutes door to door. For a suburb that's already popular with families and professionals, this is the missing piece of the puzzle. Now, let's be real. Five Dock isn't cheap, okay? The current median price is sitting around the $2.1 million range. This is a premium inner west real estate. But here's the thing, suburbs with comparable connectivity like Newton, Marrickville are already more expensive and they don't have the family appeal, the space, or the village that feels like 5 Dock. So yes, you're paying a premium, but you're also buying into a suburb that's about to leapfrog its neighbors in terms of accessibility and convenience. And for investors or upgraders looking at the medium to long term, the Metro Tunnel opens in 2032, representing a clear value inflection point. History tells us that suburbs getting the first heavy rail access see some of the biggest price jumps because you're not just improving the existing service, you're introducing a completely new level of connectivity. From a rental perspective, 5 Dock is rock solid. Low vacancy, high demand from families and young professionals, good schools, cafes, parks, community infrastructure. If you're looking at the inner west, you want to position yourself ahead of the Metro West completion. 5 Dock should absolutely be on your radar. It's not the cheapest option by all means, but it might be one of the smartest. All right, so let's head north a little bit. Number 4, Woolloongabba in Queensland. Now, if you've been following Brisbane's property market over the last few years, you know it's been on fire. And Woolloongabba, or the Gabba as locals call it, has been right in the middle of the action. And here's why. The Cross River Rail. This is a 10.2 kilometre rail line running from Dutton Park to Bowen Hills with 5.9 kilometres of tunnel running under Brisbane River and the CBD. Woolloongabba is getting one of the 4 new inner city stations, and not just any station, a major station, right next to the Gabba Stadium, right on the doorstep of some of Brisbane's most important employment, education, and cultural precincts. The project is expected to be completed by 2029. That's less than 4 years away. Right now, the median house price in Woolloongabba is around $1.35 million. Yes, that's expensive, but let's put that into context. Woolloongabba is 3 kilometres from the Brisbane CBD. You can walk to the city if you really wanted to. You're surrounded by Southbank, Kangaroo Point, and the CBD employment core. And with Cross River Rail, you'll have direct access to the entire Brisbane rail network, north, south, east, and west, without changing trains. For renters and buyers, that is a massive drawcard. But here's where it gets really, really interesting. The Queensland government has fast-tracked approvals for 16,000 new homes in Woolloongabba priority development area. That's not a typo, 16,000. They're rezoning, they're cutting red tape, they're accelerating development to capitalize on the Cross River Rail infrastructure and the 2032 Brisbane Olympics. Now, some people hear 16,000 new homes and think oversupply, but they may be a little short-sighted. Brisbane's population is growing faster than almost any other Australian capital. Demand for inner city rental accommodation is at record highs. Vacancy rates are tight and rents are rising. And Woolloongabba, with its proximity to the CBD, its new rail station, its cultural and sporting precincts, is about to become one of the most connected, most livable, and most in-demand suburbs in Queensland. One local agent recently said, and I quote, "It is my prediction that property prices in Woolloongabba will double in the next 10 years. Now, I'm not going to guarantee that. No one can, but the fundamentals are there. The infrastructure is being built. The demand is real. And if you're looking at Brisbane, if you want inner city proximity, if you want to ride the wave of the biggest infrastructure project in Queensland history, Woolloongabba has to be on your list. Just to make sure you do your due diligence, understand the development pipeline, and know what's being built around you, and invest with a clear strategy, not just the hype. And finally, we come to number 5, Kilo East in Victoria. Now, this one flies under the radar, and that's exactly why it's so interesting. Kilo East sits 16 kilometers northwest of the Melbourne CBD, historically being a quiet, affordable, family-oriented suburb. Lots of older housing stock, big blocks, decent parks, nothing too flashy. But it's about to get a major infrastructure upgrade. Once again, the Melbourne Airport Rail Link. The same project, Transforming Sunshine, is also running through Kilo East. A new station is planned for the suburb, giving residents direct access to the Melbourne Airport, the CBD via the Metro Tunnel, and regional rail services via Sunshine. This is a suburb that's never had this kind of connectivity. And when the trains start running in 2030, the market is going to recalibrate fast. Right now, the median price in Kilo East is around $780,000. That's affordable. That's accessible, right? That's the kind of entry point that most investors can actually work with. And here's the thing, Keilor East is right in the gentrification pathway. As Melbourne's inner north and inner west get more expensive, young families and professionals are pushing further out. They're looking for space, affordability, good schools, and now with airport railing, they're getting connectivity as well. Keilor East is also ripe for renovations and knockdown rebuilds. A lot of housing stock is older, which means there's opportunity to add value through smart improvements. Buy a tired brick veneer or on a big block, renovate or rebuild, rent it out to a family who wants space and access to the new train line. Hold it for 5 to 10 years as the market catches up. That's the play. Now, there are risks. Some parts of Keilor East sits under flight paths, so you need to be careful about aircraft noise. And if the land gets rezoned as part of the rail corridor development, you could be subject to Victoria's new windfall gains tax. If you pick the right street, the right property, and you buy with a long-term hold strategy, Keilor East could deliver serious upside. It's not glamorous, it's not trendy, but it is strategic. And sometimes that's all that matters. All right, so let's bring it all together. 5 suburbs, 5 major rail projects, billions of dollars in infrastructure spent. Sunshine West, Melbourne Airport Rail Link, and the Sunshine Super Hub, $700,000 entry point. Transformations underway. Westmead, Sydney Metro West, health and education powerhouse, metro station opening in 2032. 5 Dock, Sydney Metro West, first heavy rail access for a premium inner west suburb, 2.1 million, but massive upside. Wollongabba, Cross River Rail, 3 kilometers from the Brisbane CBD, 16,000 new homes, completion by 2029. Keilor East, Melbourne Airport Rail Link, affordable, under the radar, gentrification potential. These aren't guesses, these aren't speculation. These are suburbs sitting directly in the path of Australia's biggest infrastructure investments over the next decade. And the investors who position themselves right now, before the trains start running, before the headlines hit, before the premiums get priced in, they're the ones who capture the value. So here's my challenge to you. Pick one of these suburbs, do your own research, walk the streets, talk to agents, crunch the numbers, and see if it fits your strategy. Because in 5 years' time, when property values have jumped and everyone's talking how obvious it was, you'll either be one of the people who acted or one of the people who wish they had. Now, if you found this video helpful, do me a favor, smash the like button. It helps the algorithm show this to more investors who need to see it. And drop a comment below. Which of these 5 suburbs are you most interested in? Are there any other rail projects I should be covering? Let me know. If you haven't already, subscribe to the channel and hit the bell icon so you don't miss the next video. Because we're diving deep into property strategy, market analysis, and investment tactics every single week. Now, if you're serious about building a property portfolio, and if you want personalized advice on your situation, your goals, strategy, here's what I want you to do. Head to the link in the description below and book a free strategy call with our team. We'll walk you through the numbers, we'll help you understand your borrowing capacity, and we'll show you exactly how to structure your next purchase to maximize tax efficiency, cash flow, and long-term growth. No sales pitch, no pressure, just straight up strategic advice from people who've helped hundreds, if not thousands, of Australians build wealth through property. Links in the description below. Book your call. Let's map out your next move. Thanks.